Last quarter was a record-setting quarter for crypto venture capital investments. This should come as no surprise. This was a quarter that included a $900 million round for a single firm, FTX. So the fact that Q3 smashed what was previously a record in Q2 shouldn't be too shocking. But the fact that venture capitalists are rushing into the space headlong is certainly something we've been watching for a few quarters now, and it's only accelerating. So wanted to touch base on this one. Some interesting numbers in here compiled by CB Insights. They do a good job of looking at the big funding rounds in the space. And this number, 6.5 billion, it's a big number, and it shows just how involved some of the biggest venture capital firms in the world are getting involved in the cryptocurrency space. I'm going to toss this to David because I think this is not necessarily a good thing. Some of these projects are finding their footing, are getting the help to get out the door, but of course, these investments come with terms, and these projects tend to have pretty significant VC bags involved. So I'm just curious for your thoughts on what you make of this record-setting quarter for crypto venture capital.
Yeah, I want to set aside the question of VCs and tokens for a second, because that's another layer of complexity. But let me ask you real quick, was that $900 million for FTX? Is that like a record round in general? I've never heard of a single round that big.
It is a record for crypto. I know that much. I can't speak to tech
it's
writ
insane.
large, but yeah. A $900 million funding round is quite big, and it was followed up on with, of course, a $420 million funding round some months later, and that will be reflected in the next quarter's data. But yeah, $900 million, really big bet.
But as far as like whether you want to go with VC or not as a company, there are definitely reasons, and we're going to talk about EOS in a few minutes, and that wasn't a VC situation, but raising too much money can be a problem for sure. What I'm most interested in here, though, is the fact that this is really just setting the table for the fight to come. Not all of this money is actually going to generate returns by any stretch of the imagination. That's the entire point of what the VC model is that the bet is that 9 out of 10 of these dollars is going to go into a hole in the ground and produce nothing. And so we have to look at this round and say, like, this is good for the sector, but it doesn't actually, in some sense, it doesn't mean anything in and of itself. You now have to pick winners and losers, see who's building stuff that actually works, and go from there. One thing to keep in mind when you look at these VC rounds, too, if you're an investor or just somebody watching the space, watch follow rounds, see how many people are putting in second rounds to their own first rounds, because that's one thing that I find to be a worrisome trend. If you're a VC who's following up on something you've already put money in and you're just helping it get to a new valuation that validates your own earlier investment, that bugs me a lot. But obviously, in general, I would say that this is good. It's let 1,000 flowers bloom. You got enough money out there for everybody who wants to run an experiment, however crazy. And I love seeing crazy experiments. Jen.
Yeah, so the $6.5 billion number is absolutely insane. But I look at this in maybe a different lens. I think VCs are always following trends. They're taking big bets on the industry. And I think that entrepreneurs should look at this. And if you're developing a product that maybe doesn't involve crypto or blockchain, maybe think about how you can incorporate that into your product. And don't do it just because it's trendy, but do it because the technology is really...
I think you just said just do it because it's trendy.
No, well, okay. trendy in the two different terms, right? Don't do it because it's trendy, but follow the trend that is actually, I think, going to change our lives. So I think that entrepreneurs can take something really valuable away from this large number being pumped into crypto and blockchain firms, and maybe look at ways on how you can innovate if you don't have a project in the space.
And the other thing for entrepreneurs out there to take away from this number is drive a hard bargain. Look for somebody who's going to be a good partner to you, who can actually provide more than money, who is going to give you a fair value for the portion of the company that they're asking for, all that stuff. Naomi, sorry.
Yeah, I think that, when we're talking about trends and what this signifies, I do see a giant push across all sectors towards decentralization. But we do have to realize that decentralization isn't a desired state for so many different industries. You really need that central point to be driving innovation, to be funding it, to holding tight reins. Decentralization, though, can be fantastic if we're dealing with censorship, or if we're dealing with ways to mitigate trust issues. governments, for example. It would be great to have like decentralized systems of power. All of that, we're sort of exploring this decentralized world, and I think that's why there's so much money flocking into this. But I don't think it's anything new that money is flocking into crypto. The numbers are getting higher as more people get involved. But I mean, if you read like Nathaniel Popper's Digital Gold, which kind of details the history of crypto right up until I think it's around 2014, and you're looking like Andreessen Horowitz was just pouring money in back in those early days, like 2012, 2013, I believe. And so you have all these venture capitalists who've been looking at this space saying, wow, this is a giant innovation. Let's find a way to get involved. And there were so many funding rounds that he details in the book that like where you had someone say, oh, I'm going to start this business and I am thinking it'll be good. And you have all these people saying, take my money, and getting angry at these business builders saying like, why didn't you include me in your round? I want to get involved with this, and the more money these people give away to VCs, the less that, they get to keep. So it's not always desired for them to be accepting this investment capital. So it's like just this very interesting situation that's always kind of been this hot thing. But as more people learn about it, as you said, Jen, it gets trendier, just like other VCs are piling in as well. And then the existing VCs with their existing capital that they've made, increased so much since the early days, they're pouring that back in. Like it's just a very exciting field for sure.